All right, today we're diving into a pretty radical idea. What if you could make financial records completely, totally cheat-proof? We're going to look at a system that's designed not just to catch fraud, but to make it mathematically impossible from the very start.
And this is really the heart of it, isn't it? Forget just trusting people. Forget waiting months for auditors to find a problem. What if a system could be honest by its very design, using pure, cold, hard math to enforce integrity from the moment a transaction is even thought about? So, to really get why this is such a game changer, we have to understand the problem with the way things are done now. You see, traditional accounting, it's not built on mathematical certainty. It's built on trust. Trusting people, trusting processes, and, well, wherever you have trust, you have an opportunity for that trust to be broken.
And this is how that trust gets broken. These are the classic moves. We're talking about just inventing fake entries out of thin air to make revenue look better, or playing a shell game, shuffling money between accounts to hide theft, or something more subtle like just waiting to record a transaction to make the quarterly report look a little rosier. These aren't just mistakes, They are deliberate exploits of a system that's based on faith instead of proof.
The crucial point is right here. Our main defense, the audit, it's like a detective showing up to a crime scene after everything has happened. It's super expensive, it's slow, and by the time they figure out what happened, the money is usually long gone. The whole system is set up to catch criminals, not to prevent the crime from happening in the first place. And that brings us to the core of this new idea. The proposal is to totally flip the script. Instead of relying on human oversight and trust, which we know can fail, this framework says, let's rely on the cold, hard certainty of a mathematical equation. Let's trust math. So here's the definition at the heart of it all. In a system like this, a transaction doesn't just get recorded because someone types it in. Nope. It gets held in this kind of digital waiting room, and it has to pass 3 tough automated checks. Only then, only if it passes all 3, is it accepted as valid and allowed onto the official record.
Now, I know what you're thinking, a formula, but stick with me. This is actually the engine that makes the whole thing go, and it's way simpler than it looks. All this thing does is create what's called a cheat detection score. For every single transaction, it asks, is this valid? If it's not, the score goes up. That's it. Simple.
And this is brilliant. This is the goal. The perfect score, the only acceptable score, is 0. If that number on your dashboard ever ticks up to 1 or 10 or anything other than 0, it means something is wrong right now. It's a real-time fire alarm for the entire company's finances.
So how does a transaction prove it's legit? Well, it has to get through what this system calls the 3 security gates. Let's break down what those are. Okay, think of this like going through security at the airport. Gate number 1, proof. Does the transaction have its papers? A digital receipt, an invoice, something to back it up. Gate 2, independent verification. Does someone else, a totally separate party, confirm this thing is real? And finally, Gate 3, reconciliation. Does it match up with the outside world? Like, does it actually appear on a bank statement or in an inventory count? A transaction has to get a green light from all 3 of these gates or it's not getting in, period. And here's where it gets really, really smart. Every single valid transaction is cryptographically linked to the one that came right before it. It creates this unbreakable digital chain, a hash chain. It's like a line of dominoes. If you try to sneak in and change one in the middle or pull one out, you don't just affect that one domino. You break the entire sequence. The system spots that break instantly. It makes the ledger tamper evident. The past is set in stone. Okay, so all of this sounds amazing in a lab, right? But how does it hold up in the real world when people are actively trying to break it? Well, the researchers ran a bunch of hostile simulations to find out. They really put it through the ringer. So, attack scenario number 1. What if you have a group of insiders all working together? They start rapidly moving funds in a big circle between different accounts, trying to cover their tracks and hide a theft. It's a classic shell game. But it doesn't work. The system catches it. That unchangeable hash chain makes every single step of that circular transfer perfectly visible. And on top of that, pattern recognition algorithms immediately flag that weird, coordinated activity as suspicious. There's literally nowhere to hide. All right, let's level up the attack. What if the fraudster is more sophisticated? They cook up some very convincing fake invoices and then try to manipulate the records to match their fake paper trail. And bam!
This is where Gate 2, that independent verification step, becomes the hero. A fraudster might be able to create a fake document, sure, but they can't force an outside third party, like a customer's bank, to confirm a transaction that never actually happened. The forgery hits a brick wall.
Okay, final boss battle. What about trying to illegally change the past? An attacker tries to sneak into a previous financial period and alter a transaction to pump up profits or hide a nasty loss. And again, that hash chain makes this totally impossible. Every single transaction is locked into its exact spot in time with an immutable timestamp. Trying to change anything in the past would be like trying to change a single link in a welded steel chain. It would break everything, and that break would set off alarms across the entire ledger. You just can't do it. So, when you step back and look at the big picture, what does all this add up to? It's a massive change in philosophy. We're moving away from a system that just reacts to fraud to one that proactively prevents it from ever getting into the books in the first place. And this slide just lays it out so clearly. Look at the difference. On the left, you've got traditional accounting. Verification is reactive, happening maybe months later. The records themselves are vulnerable, they can be changed. Auditing is this huge, complex, expensive ordeal. Now look at the right. With a cheat-proof ledger, verification is proactive, and it's in real time. The records are immutable, which makes auditing so much simpler and more transparent. But the biggest difference? Look at that last line. Fraud detection goes from being an investigation after the damage is done to an instant visual alert the second something smells fishy.
So let's just boil this down. The benefits here are huge. The system uses math to force every transaction to be valid. It creates a perfect, unchangeable audit trail. It makes any funny business pop up in real time. And according to the paper, this not only makes the whole accounting process way simpler, but it also builds an incredible amount of trust for investors, for partners, for everyone.
And honestly, this quote from the source material just nails it. This isn't just a small upgrade to the old system. It's a paradigm shift, a totally new way of thinking about financial integrity. It's all about moving from reaction to prevention. And that leaves us with this huge, fascinating question to think about. If we can apply this level of mathematical proof and real-time transparency to something as complicated as corporate accounting, what else could we apply it to? Supply chains? Voting systems? Government spending? The potential here is just enormous.